Do that. Okay. Okay, so we are going to get started here. This is our session number 7 of our training. So tonight is really mostly all about special circumstances. So again, it's going to be focused mostly on non-resident taxation. We're not really going to touch on resident taxation at all, because this is all about like when things go weird or things go wrong for non-resident aliens. Next week is our final tax training session, and then tax clinics start in 2 weeks. So we are almost done. As we get started tonight, we have somebody here that's from the Low Income Tax Clinic, Samuel. So he's going to talk for a few minutes. I'm going to give a couple of general updates, do a demonstration, and then get into special circumstances. I'm going to probably switch and do state first before circumstances. We'll have a break somewhere around 6:30, 6:45, kind of like normal. All right, and with that, I'm going to escape out of here, switch over to that. All right, make that lit off. Okay, Samuel, it is all yours.
Hi, everybody. And hello to everybody on Zoom. My name is Samuel Mackie-Colley. I'm a second-year law student over just down the street at the law school. And I'm one of the student attorneys at the low-income tax clinic that's housed at the law school. So just page down. Perfect. Okay, so what is the low-income tax clinic? So this is part of one of our clinical education offerings. So this is where we're working directly with clients, and the law school has 20-something clinics overall. And so within the clinic, we have 10 student attorneys and then 4 student director attorneys who are kind of overseeing us as well as handling some of their own cases. And then all of us are supervised by Professor Caleb Smith. And so he's kind of he's the lawyer who's checking to make sure that everything we do is right. And so, yeah, we're funded by a grant from the IRS actually to provide representation to a portion of the population that might otherwise have challenges finding tax attorneys. A lot of times tax attorneys can be really expensive. And so we have clients who just frankly probably wouldn't be able to afford a lot of those services. So we're trying to provide this kind of public service to the community as a whole. What does the tax clinic do? We kind of have 3 main prongs. We advise clients on a lot of issues that happen after filing. So things like audits and different assessment issues, and then collections questions. And then I think I might have skipped a slide. No? Oh, just kidding. I didn't. And then we also represent clients in different levels of court. So both in the tax court, which is a separate part of the judicial system, as well as then federal district court. And so this is kind of going to vary a lot on what type of issue we're focusing on. And then we also have to play kind of an advocacy role. I mean, because we have this long-running relationship. The clinic as an institution has a long-running relationship with the Minnesota Department of Revenue, as well as the IRS and the Taxpayer Advocate Service. So because of that, because we're kind of in this unique situation, we can see these patterns of issues that pop up, and generally our contacts at those organizations have been really receptive, and some of our advocacy has resulted in some kind of policy changes or different kinds of customer service approaches. And so the one big thing, a big caveat, is that we don't really help clients with preparing their income taxes. Usually most of the issues that we're dealing with come after the fact that they've filed a return and then there was something wrong with that return. Okay, so who do we help? So as I said, our clients are all defined as being low income. So generally their household income can't exceed more than 250% of the federal poverty level. So I kind of listed what that looks like for individual households. I know that you're going to be working with students for the most part. So we have, and actually I think we currently do have some or students as clients. And so this is kind of or students can fit into that population. And we have to help people with federal income tax issues because of the kind of the rules in the grant. But then there's kind of a catch to that where if they have a federal issue, then we can also offer some advice on state level issues. But there always has to be a federal issue in question. And then there are limits on the amount in controversy. So I think right now it's about $50,000 is the maximum amount in controversy. So we can't be helping clients or with really, really big issues. Okay, so I know that you all are helping people to prepare taxes beforehand. So I just want to give a really brief overview of what happens after you file the taxes. So once you click e-file. So there are two big phases in the post-filing tax world. So one big landmark is assessment, and then the other is collection activities. And so assessment, that's really getting to the root of how much tax does somebody owe. And whenever issues arise with, or kind of questions arise with the IRS, it's usually they're trying to get to the legally owed amount, and they want to make sure everybody's paying their fair share. And so after you file a tax, there's an initial check. Usually the e-file software kind of checks to make sure all the math is right. But then the IRS also might audit people, especially if they see something that is amiss with a tax return. And so usually the audit process takes a while. It can be months or even years. And so throughout that process, there are a lot of opportunities where the IRS will ask you to provide more information about this thing that looks wrong. And there can be some back and forth. But then one of the key components is once you've either reached an agreement or the IRS has asserted, no, we think that you're deficient, that you have omitted some income, then they may issue a notice of deficiency, that's a really important document that kind of starts the clock running, and there's a limited amount of time that you can challenge that decision or that notice after that. So when you're working with clients, if someone comes to you and says, hey, we have a notice of deficiency, that's kind of a sign that like, hey, this might be a good candidate to refer to the tax clinic. The other big type of action or activity that goes on in the post-filing tax world is collection activities. So this is once an individual taxpayer and the IRS have agreed that, okay, this person owes this amount of taxes, but they can't pay that amount of taxes or that amount of tax. So the IRS has various options that we'll touch on in other slides, but basically the IRS has various options of how they can work with a taxpayer to pay for the tax or even kind of excuse some of that tax. But basically, there are different steps where the IRS is going to contact people before they go into any more restrictive actions. So here are some key documents to be on the lookout for are something called a notice in demand, a notice of intent to levy. These, if a client comes to you and says, hey, I got this letter from the IRS, again, that would be a really good candidate to send or to refer to the tax clinic. Oh, yeah. Cool. Okay, so I'm not going to read the hypothetical case scenarios up here, but basically a common pattern with the clients that we see are somebody who either filed taxes some time ago, or maybe they didn't file taxes at all. And then the IRS has since contacted them and said, hey, you owe tax for this year. So a lot of it is kind of doing some sleuth work and kind of building together putting together the record of what happened with that client, and maybe or trying to figure out why does the IRS think that they owe more tax? Why might the client not owe more tax? Or then trying to address in some instances, how do we help the client pay for the tax or negotiate some kind of a settlement offer that might excuse some of that. And so I mentioned that there are various options and so we typically work in kind of 4 big prongs. So we do a lot of work that's called tax litigation. So this is usually either going to the tax court or the IRS appeals office and kind of countering the IRS's position when we think that they've misinterpreted the law. And so we do this on a pretty regular basis, and it can be really successful. We've won cases I actually just settled a case a couple months ago, and was able, because in that instance, we were able to identify, okay, this is the misinterpretation of the law that the IRS had, and they agreed with that. And then there are a couple other opportunities. Clients can, we can work with clients who have collection challenges to negotiate either an installment agreement to put them into currently not collectible status, or to negotiate an offer in compromise. And so these are all options where the IRS will work with an individual taxpayer to perhaps extend the time frame over which they need to repay their tax that they owe. Or if they're simply in a position where they can't pay the full amount, then the IRS will negotiate an agreement where they'll be willing to accept a lesser amount, as long as the taxpayer then remains in so as long as the taxpayer continues to file and pay their taxes going forward after that. So I don't expect, there's certainly not any expectation for any of you to know the exact differences between the different types of options, but the key thing is to know that there are options that the tax clinic can help clients with if they are facing some kind of an issue with the IRS. So whether the IRS is auditing them, or if the IRS has issued a notice of deficiency saying that they owe more taxes, or then if the IRS is threatening collection actions, we can kind of help ease the pressure and the stress by trying to find actionable solutions to clients' cases. So that's about all I have. Does anybody have any questions about the work that we do, or anything related to that? Great.
Yeah, so I'll just throw in a couple words here. So generally, right, so the idea mostly, right, is that we do everything up until they file. Then after they file, if there's a problem, that's when we call these guys. They come and help us. So if you talk to any clients when we're doing taxes, and they say, oh, well, I got a letter from the IRS, or I never got my refund, or something like that, right? Those are keys to say, hey, maybe we should follow up. You can have them send an email to the tax assistants. We can kind of reach out to them, do a first little quick check to say, hey, like sign into your IRS online account, right? That'll tell you if there's a check waiting for you. They just couldn't find where to send it, or what the problem is. And then we refer people over. We don't do it a lot, but we do it for all of the stuff that is difficult, right? And says Samuel, you can tell, right? They would be very excited to sue the IRS on behalf of any of our clients that we send over there. So yeah, so that's that. Are there any questions online at all? All right, I'm going to take that as a no. All right, if there are, please let me know. We've got Sam contact information, and I will put this out on the Moodle course as well for everybody to see. And then we'll have some like contact me cards for the in-person clinics, so you can give them that information. And we'll have it online as well for everybody else that's not going to be in person. And thank you, sir. Have a great day. We appreciate you coming to visit us. All right, and now let's get back to the preparing of the taxes. All right. Okay, so a volunteer update. And I'm going to preface this by saying this is mostly not for everybody that's here right now, right? This is mostly for the people that aren't here, but I'm going to get it on record, and I want you guys to kind of know where we're at and what's going on. So the first thing is that I'm not going to pester people anymore on clinic signups, right? It is kind of what it is. I've already asked everybody a bunch of times, as much as I'm going to, so I'm not going to pester you guys about that anymore. But I will pester you about Moodle and about doing the assignments. So to be a volunteer at the site, you have to do more than just pass the IRS tests. You have to learn tax software, or state tax law, and then the TaxSlayer software. And then you have to demonstrate that you know this stuff so that you can volunteer at the clinic, right? We need you to be competent, to be knowledgeable, to be able to help people there at the tax clinic. We have definitely done, like all of our recent scenarios are mostly returns that we've already done before, right? They're returns that we did in the past. We did them by hand. We're adding in the state now. We're doing that. But most of these, with like one exception or so, you guys have the federal return. So when you submit a federal return to me in TaxSlayer in Moodle, it should match the federal return that you already have, right? So please go back in, check that. Because at this point, I don't know if you don't know how to do it or if you just never checked, or what's going on. And one of the other things that's very important for you to learn, right, is if you don't know, then ask for help, right? Because we don't want to give bad advice. So if you don't know what to do, that's totally fine, right? You're never going to be in trouble for saying, I don't know. Can you please help me figure out where to go to do this? So of our roughly 40 returns, we've got 9 volunteers that are basically all caught up. They've done all the state practices. They're really good. We've got another 8 that are sort of like in the process. They've done some stuff, but they're not quite all caught up. Everybody else, which is mostly, again, not the people that are here in the room or on Zoom, of course, right? They're the ones that aren't here. They haven't really done anything other than pass the IRS test. And that's not going to be okay. So please engage. Passing the IRS test is the hardest part, but there is still work to do. There is still more to learn. There are only bad things that happen if you go into a tax clinic and you haven't done this work, right? You can't answer the questions or you answer them incorrectly. And of those, by far, the worst one is to answer them incorrectly. And in all honesty, right, if we need to cut back our events because we've only got 17 volunteers and that's all we can support, then now is the time to do it, right? We're not going to do that in mid-March when everybody's desperate for help. We're going to do it now when we know kind of what the capacity is. So if you are behind, please catch up. If I'm talking to you right now, I will email those that are behind that are not here live with us. But please, you've got to do this. There will be a final, we're calling it a readiness check, right? And it's not like a final exam. You can do it as many times as you need to, but you're going to have to learn this stuff to be able to volunteer. And you've got to show me that you can do it. All right. And enough of that. All right. On to happier things. So we are open for the season. Our big announcement that normally goes out with canceling the messages, canceling last year's membership, got kaput by the member space people. Our reminder that goes out to everybody through the ISSS newsletter did not go out this week. So we are like a week behind in terms of getting the announcements out there, but everything is out there. It is open. Please go sign up. If you are a volunteer, number one, you shouldn't have to pay to do your taxes, right? Get your taxes done for free too. And then also see what the clients see, right? We're going to do some stuff. We're going to look at guides tonight. So you need to be able to see that. We've turned on automatic approval for the memberships. So just go in there, sign up. If you're with NRVTAP, pick that one. If you're not, pick whatever school you're with. The fundamentals are all the same. Really, the things that are different are like Twin Cities clinics versus Pennsylvania clinics versus App State clinics, things like that. All right. So this one may yet have another update. So last week we said TaxSlayer is not accepting e-filed returns for 1040 NRs. Then they got back to us on the 1st of February saying, yes, we've turned it on. It's all good. And then we had another reject today and the people from TaxSlayer said, yeah, it's not turned on yet. So it's a bit of a confused muddle. You may or may not be able to e-file a 1040 NR return. We will try to get some clarity on that from them tomorrow. All right. Any questions on that before we continue on? Okay. So quick review from last week. So we are going to support people from 7 different states. We got through a whole bunch of those. My brain was fried on states, especially kind of ending on Minnesota. We didn't get to Maryland and Ohio. We're going to do Maryland tonight. We are not going to do Ohio. So it's, yeah, I was not ready to teach it because it's more complicated than it was explained to me as. So we're not going to do that. There will be a guide that talks how to do that. We may add a little bit of that to an assignment. But in general, we're not going to spend a lot of time going in depth in Ohio returns. A couple of the key points. So generally, right, the software does a pretty good job of preparing state returns, but sometimes we need to make some adjustments. And almost always what that state residency statement is at the start, where it says, oh, pick which one you are, that statement is not going to be right for our clients. So in our guides, we will generally have guidance about you should pick like Minnesota resident or North Carolina non-resident. We will tell them or give them the information so that they can determine what their proper state residency return option is. All right, this was the list of states. Okay, let's do a demo. Let's do a demo. Okay, so everybody hopefully has been into TaxSlayer quite a bit for the practice lab. So when you go into a membership, so if we go to like the main North site, click on the Your Account. I've got everybody, so I can pick whichever one I want. I'm going to do this one. Go to the Do Your Taxes page, and then scroll down. Here's the software to go into it right here. Click on that, off you go. It's very boring VITA TCE self-prep site. And then you'll create an account. I've already done that, so I don't need to do it here. We're going to go in. All right, but I'm going to reset everything. All right, if somebody makes a mistake and they can't get out, you do that transactions, clear your return and restart. That makes everything go away, almost everything go away. And that's what we're going to do. All right, try it again. Okay. All right, welcome back. Whoa, it didn't like that. Let's try. Get rid of those. Try a new one. See if that'll work. All right, well, now I'm going to have fun like our clients will. Signing out. I'm going to shut down the browser. We're going to start up the browser. Maybe. Okay, there we go. All right, so let's get started on your return. So you can see already, right, this is a much more user-friendly version than what we have in the practice lab. We start off, it says, congratulations, you created a return, personalize your experience. In other words, give us your personal information so we can send you letters to try to sell you things. You can just skip that. You don't have to put it in. We did not do a return last year, so we're going to say no thanks. Let's do Lisa, because we know her. Date of birth, we'll just say 1/2001. She is a student. All right. We're going to enter her address, which it did keep over. We tell everybody, at least to start with, put full year resident of this state. You can fix it later. You don't have to worry about what it says right here, but you have to put something, and it's either full year or part year. So we just say full year to start with. We check any of these that apply. Lisa was a student, so we'll click that one, and that's the only thing that applies. She is a non-resident alien, and then she's a single non-resident alien. She has no dependents, no children that she's taking care of. She has no identity protection pin. And this is her information. Off she goes. Yes, let's slay it. Okay. All right. Adding your forms with QuickFile. Sounds like a fantastic idea, doesn't it? Right? Help me figure it out. But then if you do this at the very end, it's going to keep asking you. You said that you had to add some W-2s. Are you sure that you've added all your W-2s? You said that you had this. Have you done all of that? So it definitely trips the clients up. So because even though they put stuff in, it still asks, are you sure you're done? So if you just click on the I don't know which forms I need, that will skip all of those little lovely messages. And it takes you straight into the income section, right? So it has no knowledge, it has no support for doing any of the systems or processes, right? This is why we have the guides, because otherwise, right, how would anybody know that you have to go back to basic information, click on the schedule OI, and then enter your information right here. And so it's the same basic functionality, right? Enter treaty exempt income, enter your days for your visits. We're going to continue. If you go to federal now, we could go down to miscellaneous forms. And then, what was it at the top? There we go, aliens exempt, right? This is our 8843. Has all of that information in there. So we would fill that out just like normal. Payments and estimates is right here for our 1042S down at the very bottom, right? We go in there, we can enter all of the same information. So kind of the underlying data entry screens are all mostly the same. It's really kind of the top level. They just made it look a little bit prettier kind of a thing. All right. We would go through, we would enter her income, right? We could just enter her W-2, just like normal. Just like normal. All of the same boxes. It doesn't automatically put in the Social Security and Medicare tax though, which is super nice. So you don't have to delete that. Select the year. Copies the wages down, just copy the state. And there you go, just like that. All right. And then when you get to the state, it works pretty much the same way, except that it will try to like automatically pre-populate, or sometimes it will. It's not consistent. I don't know why. But yeah, so it pre-populated a Minnesota return for us. We'll just say no here. And you can see that it started it as a resident because we'd selected resident for her. So if we needed to change that, we could always just go here, delete the return. And then it's kind of in the main screen where you can say, okay, I want to do a Minnesota return. And then you can select your type of residency. That's how it works. Okay. All right. So I know that wasn't like a real actual return demonstration, but it does kind of show you how the screens look. Like I said, you guys are very welcome to go ahead and create your own account in TaxSlayer and do that. You should know though, it is a live system, right? So don't put in so I put in a fake number, right? I put in 00 whatever 03 because that is not a real Social Security number. It can't be e-filed. It won't let me do that. All right. You can put in your own number and you can file your own return. You can put in somebody else's number, make up a number, put somebody else's number in there, and you could file a return for them if you're not careful. So please put in some sort of a fake number. Lots of 9s work really well as well, right? If you want to mess with that. Okay. All right. Any questions about TaxSlayer FSA? All right. Okay. All right, I'm going to stop that. I'm going to come back to here then. And all right, we're going to skip that. Okay. Let's talk about Maryland then. Okay, so here's my revised version of the easy to hard, right? Which is like a bunch of a cluster down at the hard. But Maryland is not impossible. It's just a little bit complicated, just like all of them, right? So for Maryland, if we talk about residency, right? Because we always talk about like what are the residency rules and then what are like the special tax rules. And then we'll talk about forms if there's anything special that we want to talk about there. So for residency for Maryland, you will be a full year resident if your permanent home is in Maryland. So if you are domiciled in Maryland. Remember, our non-resident alien students can't be domiciled in the United States, so that one will never apply to them. If they're a U.S. citizen or a permanent like green card holder, they could be domiciled in Maryland and then they would be automatically a resident. The other criteria is that your permanent home is outside of Maryland, but you maintained a place of abode or a place to live in Maryland for more than 6 months of the tax year. If this applies to you and you are physically present in the state for 183 days or more, you must file a full year resident return. So they have some ambiguity in this statement, right? This is straight from the Minnesota or the Maryland, like instructions for how to file. So, right, an abode is all it's defined as is a place to live. So could it be a park bench? Could it be a car? Could it be a, it could be anything. The whole idea of for more than 6 months, right? So what does this mean, right? Any part of any more than 6 calendar months, no matter the duration of days, more than 6 duration months, even if it isn't more than 6 actual months, combination of those things where it's got to be like 6 duration months, so like 183 or more days, plus at least some days that are in more than 6 calendar months. It is a little bit unclear. But we are going to go with option number 3, right? The sort of complicated, but it's also like the most resident-y that you can be, right? So if you are there for more than 6 months, you have an abode, a place to live for more than 6 months, and those 6 months include days in more than 6 calendar months, then you will be a full year resident of Maryland, which is a pain, but that's all right. Okay, and then you can be a part year resident for Maryland if you began or ended your residency in Maryland during the year. So that's basically you move in and you establish domicile, or you were domiciled and you run away. All right, so generally they will be, for our residents, our clients are going to be full year residents, right? If you're there in the spring and the fall, you're going to meet those 183 days. You're going to meet that more than 6 months for presence and abode. So you'll be a full year resident. For people that arrive, like their first time that they arrive, like as a freshman or like a first year student, that first fall, they probably would be a non-resident, right? They've probably only been there for maybe 150 days, something like that at the most, 5 months. So they will be non-residents, but generally residents. Some of the easier stuff, they do use the same filing status. So it's going to be single or married filing separately. They do not honor tax treaties. They do have a local tax. The good news for us, though, is it's collected on the state return. So there's no like extra forms that you have to select at all. You do just have to select the county that they're living in when you file the return or prepare the forms. You must file a Maryland return if you have to file a federal return and you are a Maryland non-resident, or if you are if you are a Maryland resident, you must file if you also file a federal. If you are a non-resident, if you have either Maryland tax withheld or Maryland source income, you still need to file. So generally, if you are in Maryland and you file a federal, you're going to file a state as well. Maryland also has reciprocity with DC, Virginia, Pennsylvania, and West Virginia for the residents of those states, right? And if you remember, all of our international students in Pennsylvania are automatically non-residents. So they're not really going to qualify for the reciprocity rules. The more fun for Maryland, there is a Maryland Earned Income Tax Credit equivalent. Supposedly, TaxSlayer will do this right if you get the income entered correctly, but it looks like you only get this if you get a federal earned income tax credit as well. So our non-resident alien students are not going to be eligible for it. Only residents would be. I've got a note out to my UMBC contacts to try to confirm that. They also have an online filing system. So if you can't e-file through TaxSlayer, there's a good chance you can still e-file your return that way rather than having to mail it in. And it appears from what playing that I was doing, if you get the income documents entered, everything pretty much flows through without really needing to make a lot of adjustments. Basically, select the county, should be good to go. However, there is one more little wrinkle that is fantastically fun, which is that the University of Maryland, Baltimore County has a very weird way, unique way of reporting their income. So let's imagine a student from China. They have $5,000 of wages on a 1042-S with income code 20. they have a $7,000 scholarship on a 1042S income code 16, and then $9,000 of taxable wages. So Maryland does not honor income tax treaties, right? So that $5,000 is going to be taxable income. And most likely that $7,000 is also going to be taxable income as well, because it's a scholarship that was treaty exempted on the federal level, but it's not going to be treaty exempted on the state level. And so Maryland, in their infinite wisdom, and I can sort of see why, they do it this way. They put it on the W-2. And so the W-2 shows the federal wages of $9,000, and it shows Maryland wages of $21,000, because we've added in both our other earned income that's not treaty exempt, as well as non-earned income, the scholarship. So if we see any clients that have really weird W-2s like this is why, right? This is kind of that extreme example for Harold, where he only had like a $2,000 difference for Pennsylvania. Whereas this one here, this fake changed up Lisa, she has a tremendous difference. Okay. All right. And Ohio, like I said, we're going to skip that. We're going to just look for the guide because we've got lots to talk about. And I'm going to go grab my seat. Are there any questions about Maryland before we continue on? Reciprocity. So yeah, so the idea, right, is that if you are I am Maryland, you are Pennsylvania. If my residents go work over in Pennsylvania, they don't pay Pennsylvania tax, they only pay Maryland tax. And then if Pennsylvania people come work in Maryland, they don't have to pay Maryland tax, they only pay Pennsylvania. That's the idea of reciprocity. The challenge, right, is that international students, they're going to not be a resident of Pennsylvania. So the reciprocity probably is not going to do them any good whatsoever, because they're not going to be a resident to claim it. But if you're an actual citizen or somebody that's here long enough to be like on a different visa, then it can be a good deal. All right. So let's go to member pages. Let's look at some of the guides. So I'm gonna jump back here. I'm gonna go here. Let's go there. So has everybody joined a thing? Join a membership. Pick one that you like. I'm going to do App State for fun. All right. So all of the pages look like this. They're very, very similar. They have like a member home that talks about, yay, welcome. And then like, this is what we do. It has a learn page where there's more information about like, what are taxes? What is residency status? There's like presentations. There's like a whole lot of like stuff that you guys already know at this point. You guys already know all of that, if you should. I think you do. Get ready is all about getting ready to do your taxes, right? Talking about income documents, talking about the forms. And then for each of the different schools, we've got information about like how to get them, right? So like here for App State, like how do you get your W-2 at App State? This is how. How do you get your 1042S? This is how. What about a 1099G? Does the state of North Carolina provide those? Yes or no? Here's how to find it. We also have our scope statements in here, the stuff we can help with, the stuff we can't help with. After that, we have do your taxes. All right, so basically the idea is everybody can do a personalized guide or go into TaxSlayer if you're a resident, or you can use the basic guides, and that's what we're going to talk about tonight. So if we look here, so these are the steps, right? If you're going to do kind of the general guides, you have to do like the work yourself, right? You confirm your residency. Do you need to file? Do you have any treaty benefits? Like which guides should you use? What special circumstances guides should you use? So we kind of walk through all of those steps. You have to file. What are your benefits? What are your scenarios? And then like down here is the information on those. So like here, okay, if I'm a student from India, here is my scenario guide that walks me through preparing my return if I'm a student from India. And it's got the same step-by-step process of like, what do you need to do? How do you get through this process? All of that kind of thing. All right. So I'm going to close that, go back to here. All right. So those are the basic ones. And then down here we have states. And then down here we have even more fun. So, and this is the world that we're going to live in tonight. So I'll be coming back to those later on. But then the final tab here, get help. So this is where I talked about it varies, right? Because it depends on where you are. So if you're in App State and you want some tax clinic help, go to the in-person appointments. You can book, based on whatever appointments are available. There are remote appointments available. There are office hours appointments available, right? You can click on it to see, right? There's a few left for this Friday, some left for next Friday, right? Even more kind of going further out. And we started to get to all of those. So lots of appointments. So hopefully we can keep all of that going here. All right. So that's kind of the structure of all of the pages, okay? Any questions about that before we dive into the guides? Here. Okay, so the ones that we're going to cover in particular tonight are adjustments if your treaty benefits don't match your 1042-S documents. We're going to talk about fellowship income that's not reported on an income document. And we're going to talk about the Minnesota property tax return, because that's a big one as well. We're going to hit a little bit on filing in multiple states. A couple of thoughts or a couple of things for you to know on like the personalized guide versus the basic guide, right? So the personalized guide was developed by taking the data from our tools, asking a few other questions, and then combining everything for only the parts that are needed. So for an example, we have a scenario that you guys are going to do with Elena, who is an F1 student from Bolivia. So we know that she's a non-resident alien, and we know that she's from Bolivia. And so we know, based on those things, we know that there are no tax treaties for her. So she would get sections from Basic Scenario 3, which is the guide that talks about how to enter or prepare your return if you don't have any treaty benefits. One of the questions we ask is what income documents she has, and she only selected that she has a 1042-S with income code 16. So we would only give her the parts of the guide that talk about entering a 1042-S and talking about entering taxable scholarship income. She says that she never filed, so we don't have to give her any of the guide pieces about state tax paid or a taxable refund. You have a question, Richard? Okay. All right. She didn't say yes to some of our other questions about like charitable contributions or student loan payments or other income documents. So she doesn't get any of that stuff, right? So she goes from potentially, many hundreds of pages of guide down to hopefully somewhere in that 70 to 80 range. All right. And she'll give us her state information. So we'll only do the appropriate state that we need to do. Okay. So it is very important that you guys learned about the guides and become familiar with them. There's a few reasons for that. One of the reasons, right, is that we're not going to train you extensively on everything. So I know I just harped earlier, right? Oh, you have to know all of this stuff. And here I am kind of turning around saying, I'm not going to train you on everything. And that is true, right? But I'm going to give you the tools and guides so that you can figure it out. And if you know how TaxSlayer works and you know the basics of the tax law and you know how the guides work, you can handle entering any of those situations. So this is also what the clients use to prepare their returns, right? So when they ask questions, they're going to ask like, what does it mean? Or what does it say? Or where do I go to do this? So being able to tell them that is very important. These are also kind of your quickest and easiest ways to answer questions. So an example from last year, right? Hi, client. I see that you entered your stock transactions on Schedule D. That's where residents enter their stock transactions, but that's not the right place for non-resident aliens. Let's delete those. And then here is the guide that you can use to get those entered properly, right? So now we've identified the problem for them when we were doing the review. We've told them how to fix it, but we've also given them the tools so that they can fix it on their own. We're going to go help somebody else. And once they've got it fixed, we can come back and check on it to make sure everything is entered properly. All right. So that makes it very efficient with your time as well, which if we're down to 17, we're going to need to be efficient. All right. Any questions about that before I move on? All right. So let's talk about where we are in terms of updating them. So all of the basic scenarios are updated. I haven't done the filing instructions yet. Those are kind of at the very end. All of the special circumstances guides are updated except for the property tax refund and the states. And then once all of the standard guides are updated, then we push the personalized guide pieces out. So it's all pretty quick after those main ones are done. So I won't get them done tonight, but it should be all done tomorrow is my estimation for that. In terms of updates, the vast majority of these updates are cosmetic. Welcome back to your 2023 tax return instead of welcome back to your 2022 tax return, right? So there's a lot of changes that are changing the year, or this button is red and now it is gray, that kind of a thing. But there are a couple of changes that are real through 2 federal and 1 state that I've found that you guys should know about. The first change, this is going to affect the people that have been here for more than 1 year most. So the first change is a doozy. Married non-resident aliens can no longer enter any spouse information on their return. So in the past, you could go in and enter your spouse's name. But then if you enter the name, they better have a social security number or an ITIN. Because if they don't have a name and an ITIN, then they can't e-file it. So this will fix that problem entirely, I think, knock on wood, for the federal return. So that is great news. It probably also means that all of our married non-resident aliens won't be able to e-file their state returns, which is kind of crappy news. So it is what it is, though. That is not something we can change, but hopefully the federal all works as planned, because that did get up a lot of people. And they would have to delete everything and re-enter it all from the very beginning. So it was a pain. The second big change is that we've updated how we enter the taxable state income tax refunds. There is a bypass entry now where you can just automatically put in the right amount that is taxable. That was never there before. You had to make it go through the math to do the calculation. So now we can just give them some guidance about look at your last year's return. Based on the numbers, either it's taxable, it's not taxable, or if it's somewhere in the middle, then email us for help and we'll help you do the math to figure out exactly what it should be. So that's, I think, a good change as well. And then the one state change that we have to make that's real is the Minnesota frontline worker payment becomes the Minnesota one-time tax rebate payment. So Minnesota just loves to give the money away, I guess. All right. Any questions on that?
I have one question.
Yeah.
Online. This is kind of related to that, but also not. Was 2022 for the 8843, did you put the first time that you ever came into the US?
Yes.
And now for 2023, it's the last one. Because I was going off the guides from 2022.
Yep. Yes. They updated the instructions. Kathy and I complained to the people at the IRS that it didn't say which thing you could do, right? Is it your first time ever? Is it your first F visa ever? Is it your most recent entry? Is it your most recent F visa entry? There was nothing that told you which version it should be. And they clarified in their instructions that it is your most recent exempt visa visit. So it should be your most recent visit. But whatever is on your I-94 history for your most recent visit, that's what you put in.
Okay, sounds good.
Yep. Nope, that is a good point. I think I'd mentioned that previously, but at least if not, then I tried to put it in the comments if anybody that got that wrong on the assignments. All right. Okay. All right, moving on. So we are going to talk about some special circumstances. And the first one is one that happens a decent amount here at the University of Minnesota, I would say, which is a scholarship or fellowship that's not reported on the 1042S form, right? So this is an international student that gets a scholarship or fellowship, but they get no documentation for it, other than it's on their one stop. So the IRS does generally require organizations to report amounts paid. They don't usually require the U of M or a grantor of a fellowship to report that income for residents. So it's your responsibility as a resident to do it, to report it, and to pay the tax on it. They usually do have to report it for non-resident aliens. However, in some of the University of Minnesota's systems, I'm going to come back to this, right? This is what they say. They basically have some explanations for why they do not always do that. And it relates to the reasons for like where the money comes from and how they process it within their student, or not their student, the payroll processing system. So there are definitely international students that get scholarships and fellowships that do not have a 1042S for them. Our real only way to find out about those is to look at their student account information. So we tell them to do that in the guide and in the instructions. We ask about, did you receive a scholarship or fellowship, but you didn't get a 1042S? So we try to make sure that they do that, but asking to take a quick look at somebody's student account is always a good idea to just double check to make sure that nothing is there, or if something is there, they've entered it. And if they enter it, well, if they get one of those, so what are we going to do, right? Well, it's still a scholarship or a fellowship, right? So we're going to follow the same treatment of it, right? If it is spent on qualified education expenses like tuition and fees, then that's perfectly fine. We exclude it. We don't have to count it. All right. So if we look at that and we see, somebody got a $1,000, Anderson fellowship for Carlson, right? Yay, that's great. But did they actually get any money back, or did that just go all to their tuition and fees? And if it all just went to tuition or fees, then we don't have to worry about it. It's not taxable. It's good. However, if they got money back, then we start to get into more trouble, right? Then we need to figure out, okay, is it going to be treaty exempt for them, right? Are they from a country that has a treaty? Or is it going to be taxable income? And then we're going to report it just like we would, or almost just like we would if they had a 1042S. All right. If it's qualified, we're never going to put it on there. But if it's treaty exempt, we're going to put it on our Schedule OI. If it's taxable, we're going to get it onto Schedule 1, line item 8R is where they end up on the forms. But we have to enter them actually into the software. All right. And so let's take a look at the guide that walks you through that. Here we go. Here we go. Scholarship or fellowship not reported on the guide. Okay, so we go through. They all have like a welcome page. This is what we're doing. Everything has the disclosures. Everybody sees those. Everybody sees the tax layer isn't smart warning. Reminder of where you are, like what we're talking about here. Scope. Like, did you really have this? Check your treaty benefits. Make sure you have that information, right? It shows you what it would look like if you had a treaty benefit, or you had this scholarship or fellowship, but you didn't have any documentation. It'll say, hey, use this basic scenario, then go use this scholarship or fellowship not reported guide. So it gives you examples of what these different things look like, whether you have a treaty, whether you don't have a treaty, all of those things. We talk about determining the taxable amount if you don't have a treaty exemption. And then we go back into tax layer. So log in. Usually at this point, they've completed their state return, so they go on to the next one. So we're going to enter scholarship or fellowship, and you do have a treaty exemption, right? So people that have a treaty exemption. So on their guide, it'll have a line, Schedule OI, income exempt from tax, amount of exempt income, and it'll tell them the amount to put. If they put their income documents in the tool, this person had a 1042S of 12,000, then they had a fellowship for 2,000. So their treaty exempt income is going to be $14,000. So then we go into basic, we go into schedule OI, income exempt from tax, right? We've already entered some values. We already had 12,000. So we're going to go in and we're going to edit it. We're going to change that number to 14,000. That's all we got to do. Continue, 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 off we go. Right? So it's really straightforward. We just have to know that there is a scholarship, how much it was, and the fact that it's treaty exempt so that we can go add it back in. If they didn't have anything in there already, we would just create a new item for that scholarship benefit. If it is taxable, so it was not reported on a 1042S and they don't have a treaty exemption, we would go to income, scholarship and fellowship grants, enter the amount. If they already had a 1042S, they would add the two amounts together. Otherwise, you just enter the amount. So it's very straightforward. If they had some amounts that were spent on tuition or required books or fees, then they could enter those amounts as well. Those are actually entered in a very different way. They're entered on income, scroll down to less common income, and then other income not reported. And you enter it as other income again, qualified education expense, like no spaces to fit into the characters. And you enter the expense as a negative number to make it a subtraction. The reason why we do this is that, let's imagine a student, they have a 1042S for a taxable treaty or a taxable scholarship, all right? But they spent money out of their own pocket, let's say $250 on books for their classes. If they reduce that $10,000 from their taxable treaty amount at the very first entry, the system will not let them e-file because it's going to match the 1042S and the taxable scholarship income. If those numbers don't match, it's not going to let them e-file. So we have to let that number match in the income and then do a separate subtraction here to make it go through. That's why we do it that way. So it's a bit of a roundabout, but it gets the return, gets all of the data entered and gets the return sent off with the correct calculation for what their taxable other income is. Okay, any questions on that one? Okay, all right. Yeah, go for it.
So the scholarship and fellowship from 31.
Page 31, yes.
So if someone has 1042 and then additional fellowship that needs to be reported,
They would,
to the sum of the amount
Yep.
or
yep, some of the amounts. Yep, some is exactly right. Okay. All right, so let's see, I feel like, there we go. Okay. That is entering scholarship and fellowship grants when you do not have a 1042S to report them. All right. Our next one is a common situation, which we've already talked about previously, is what do you do when your treaty benefits don't match your income documents? So there are three kind of typical or common situations that we can see this, or a couple of very common and one not common but occurs kind of scenarios. So scenario number one, you receive a W-2 from some wages, you receive a 1042S for some wages, and your total of your W-2 plus your 1042S wages is less than your treaty benefit. This is very common when people start working and they don't sign their treaty benefit paperwork until after they've been working for maybe a pay period or two. Those first paychecks are reported on a W-2 and the later ones are reported on a 1042S. This happens a lot for teachers and trainees and researchers because they come here, they start working, they don't get that paperwork done right away. They have an unlimited benefit, so there's no maximum on the limit. But because they've already been paid and tax has already been withheld on a portion of those wages, those get reported on a W-2. There's no way to kind of fix it after the wages have been paid. That tax is already paid to the IRS and to the state, and that gets reported on a W-2. This also can happen for students that have a limited amount of treaty exempt wage income and their total income is less than their treaty benefit. That's not very common, but it can occasionally happen if somebody's like starts a job and then they hate it and they quit after a few weeks. All right, the scenario number 2 is our scenario that we saw before, right? You only received a W-2 for wages. You're eligible for a treaty benefit, but you did not get a 1042-S form, right? This is Sergio's scenario, right? He worked, he got his W-2 for, I think, $8,000. So he never got a 1042-S, even though he was eligible for a $5,000 treaty benefit. This is very common for people that do not work on campus, right? If they don't work for a college or university, basically, I don't think I know of any private employers that do treaty withholding benefits for people. It's only the colleges and universities that do that. And even for people that are at a college or university, right? If the students never go in, then there'll be no paperwork. And so they get it all on a W-2. The third situation is not common, but it's happened a little bit, which is if you get 2 1042-S forms and together they total for more than your treaty benefit. So this time we saw this here in the clinic was when we had a student that was a transfer. They worked at one school, they had a benefit for like $4,000. They came here to the U of M, they worked again, they had another 1042-S for $6,000. Their maximum treaty benefit was $8,000. And so because the schools never talk, they all just reported that income separately. But now he does not really get $10,000 of treaty benefit, even though he's got 2 1042-S's with $10,000 listed on. Okay. All right. So the treaty benefits guide or the personalized guide will walk them through entering their income documents, and it'll give them the information again, right? What are the adjustments that we have to make? There are going to be adjustments in your Schedule OI somewhere, either in the general information or the income exempt from tax, or both of those areas. Same thing for situation number 2, right? We make some adjustments there. Situation number 3, that one, we actually make a negative adjustment because we have to report more income subject to tax. And so the way to make that work is a negative adjustment. All right, so let's go see what it looks like. Actually do that. If we go, close this guy, treaty benefits do not match. All right. Same intro slides, they all have them. All right, so here's the thing, like these are your treaty benefits. These are the situations, kind of walk through. All right, so you're in situation 1, right? You've got some benefits on 2 kinds of documents, but it all should be treaty exempt. So these are the adjustments you have to make. You make an adjustment for your Schedule OI, wages exempt by treaty, and then Schedule OI, income exempt from tax. So basic, 1040 NR, Schedule OI. The first one, the general information. You scroll down. So on our basic guides, if you'll remember, when you do that general information, there's a thing at the bottom. It says wages exempt by a treaty. We have a big red X by it that says don't put anything in there. That's because under normal circumstances, you should not put anything in there. Putting a number in there will subtract that number from whatever wages or whatever number is on line 1A. So it subtracts from your wages. So if under most circumstances, you don't want to put a number in there. But when you have somebody that has wages reported on a W-2 that should not be taxed, this is where you go to make that subtraction. So Schedule OI, that general information tab down at the very bottom, that's where you put that number in. And that is a mistake that a lot of international students will make. They'll see that and they'll say, oh, I need to put my treaty benefit in there. And so they'll eventually, essentially like double count their treaty benefit because they'll have their 1042-S and then they'll subtract another $5,000 or whatever away. On the income exempt from tax, you have to go in and then you would adjust it, right? Because you probably already had it for your 1042S, but now you're going to put the full amount that was treaty exempt, not just the amount that was on the 1042S form. Back, off you go, and you're done. Situation number 2, right? We're only having to do the subtraction here, and we're having to report the income. So wage exempt by treaty is, this one is a 2,000. You report 2,000 of wages exempt and 2,000 of income exempt by treaties. The same process. You go to the same place, scroll down to the bottom, enter the subtraction you're going to make, and then enter in the income exempt from tax, enter the amount of the treaty exemption that you have. Okay. And then the third one is the same, except we're kind of doing that reverse, right? We have to report some extra tax or income subject to tax. But when we enter that number there, we enter it as a negative number, right? Because he had too much income reported as being tax exempt. We need to report more of it as tax exempt. So we do a negative number to make it show up properly. Okay. Any questions about this? Right. So this is definitely right. These are the advanced tax layer techniques, right? We are fixing returns when something has gone wrong. The client's paperwork is not like perfect. It's not the way it should be. And we're helping them claim their treaty benefits when their paperwork doesn't kind of provide for that automatically. Okay. Let's keep on going. Okay, working in multiple states. So we've already done that a little bit, right? And it's really not incredibly hard. Mostly it's about figuring out what is the proper tax residency status for that state. And then sometimes if you are a non-resident or a part-year resident, you have to make some additional adjusting transactions. So for a resident, everything will generally flow properly from the federal to the state. But in particular for Minnesota and North Carolina, scholarships and fellowships don't automatically transfer over. So if you were a Minnesota non-resident and a North Carolina non-resident, and you got a scholarship in Minnesota, it would show up on your federal just fine, but it wouldn't show up on your Minnesota non-resident return without you entering that information in there a second time. So you have to make that additional manual adjustment is what you have to do. And you go in, there's like an other income or income adjustments in the Minnesota return. That's all you have to do. For Pennsylvania and California, that's not really a problem we typically have because all of those people are non-residents automatically. But for Minnesota and North Carolina in particular, that is a problem, an adjustment that we have to make. All right. We've already done the residency stuff, right? Pay Minnesota tax on Minnesota source income or pay Minnesota tax on all income. The M1NR is the form that's used to kind of like do that math to divvy it up. All right, this is what the form looks like. The wages go automatically at the top based on what's on the W-2. The problem is the scholarship income. It shows up here on line number 8 for other income, but it won't show up here automatically unless you go enter it yourself. That's the part that you have to go in and do manually. All right. The other thing that you should know is that even though the instructions say if your Minnesota gross income is below 13,825, see instructions, and you don't have to put anything here, just do a 0. That only applies to students from India. That does not apply to everybody, even though there's always a few students that try to argue with us about that. And the reason why is that's only available to somebody that can claim the standard deduction. And only students from India can claim the standard deduction. Everybody else, the number is $5. So they have to do it. It is unfortunate. And I wish they would change the silly instructions, but they never want to do that. All right. So on the M1NR, there's also a little bit of fun. I didn't notice anybody talk about it. Nobody said anything to me in their messages, and I didn't respond on it as well. So on the M1NR, you can indicate if you're a full year non-resident or a part year resident, and then you can put like the dates for the part year time. Then there's a spot for your other state of residency. And question is, should Kim show New Zealand in the other state of residency? Right? The instructions say nothing about how to fill out this section. The form itself says state, other state of residency. So if it's not a state, maybe it should be blank. In the software, you have the option to select a state, or you can also select a country. So that seems to imply that there should be a country there. But if you put a country, if you select a country, nothing shows up. Yes.
The nations that participate in UN member states.
Maybe. I think that's probably giving them too much credit though, but possibly. So I actually asked today because I was like, what is it supposed to say? Because it's not saying anything right now. And I was pretty sure that it was supposed to say the country. And this would be the fun, right, of the tax world. So I asked the Minnesota Department of Revenue, like, what do you want to have the answer be? And they sent it to TaxSlayer because obviously TaxSlayer is the arbiter of how Minnesota should fill out their forms. But we got a response back, so that was good. So the country of residency is not displaying on the non-resident return. It's a display issue on their end. It's showing properly on the part year Minnesota return. They've opened an issue. They will fix it likely by the end of the week. So the answer is it should be a country there. They just have a bug that they didn't catch. And so hopefully we'll get it fixed here shortly. All right. If you're doing a part year resident, right, we have a challenge for many of our students because their part year residency is not like one period, right? They are here in the spring and then they're gone for the summer and then they're back in the fall. There's only a spot for like one period. So generally my recommendation is pick the longest period that they're here. So if they're here for like the spring semester, that's January 1st to like May 20th, something like that, right? That's 4 months, 5 months about. Then they come back in the end of August. So that's only 4 months afterwards. So put the period in the spring semester because that's the longest one. That's all we've got room for. If the Minnesota Department of Revenue has a question about it, they can send a letter. We'll be very happy to help them answer that these are all my periods of residency. Here you go. I hope this answers your question. Change your form, and then I can just tell you right up front. All right. Okay. So if somebody needs to do this form, they will go through, if they're doing the basic guides, they'll do the basic guide, then they'll walk through the special circumstances guide, and then there's a guide that helps them figure out their Minnesota residency. So this is part of what we're trying to upgrade this year, right? Is it because it's a pain and especially to have to do it sort of offline. So that's why we want to automate some of it, make life a lot easier for them to like update everything. All right, so this is like the official worksheet. It basically talks about the states that don't have taxes, the states that we help with, everybody else, you're on your own. And then we have this very lovely little sheet that says, hey, you get to do some math and you get to count some days because you should also suffer for doing your tax return. And it's basically start date and end date, the state or country where you were living. Was it an abode, right? Because remember, Minnesota cares about whether it was an abode. If you were not in Minnesota, did you still maintain a Minnesota abode while you were gone? Count the number of days, and then were you a resident or non-resident for that period of time? Add it all up, and then you get kind of your three options, right? Full year resident, full year non-resident, or part year resident. So that's the work that they have to go through right now that we're trying to like semi-automate for them. So let's imagine that our dear friend, Mr. Sunil, worked for Cray out in California. So he had his internship, but it was not here in Minnesota. No, it was out in California. It was fabulous. He left Minnesota on May 31st. His apartment lease also ended then. He started work out in California on June 2nd. He stayed in an Airbnb while he was out there. Last day of work was 8/21, came back on 8/23. He stayed with a friend in their apartment for a week. His new apartment lease started on 9/1 through the end of the year. All right, so that's our pretend friend Sunil, who's now had a fabulous summer adventure. All right, so if we were going to fill out this form for him, this is what it would look like, right? The 1st through May 31st, super easy. He was in Minnesota. It was an abode. Doesn't apply. Count of the days. 6/1 to 8/22, he was out in California, right? He was no longer in Minnesota. It was an abode, but he did not maintain a Minnesota residency, so he was a non-resident during that period of time. 8/23 to 8/31, he was back in Minnesota. It was an abode, right? He was staying in his friend's apartment. He didn't rent it, but he did occupy it, right? He was sleeping on that couch. He was there. So that counts. 9 days as a resident. And then 9/1 to 12/31, really again, simple, Minnesota. It was an abode, number of days. So what do you guys think? What is Sunil's new Minnesota residency status? I'll do this. We'll do it so I can see people. So if you're online, you can do a thumbs up. If you're here in class, you can do a hand raise. Who thinks he's now a non-resident of Minnesota? Raise your hand, give me a thumbs up. What about a part-year resident of Minnesota? Anybody think he's a part-year resident of Minnesota? What about a full-year resident of Minnesota? Anybody think he's still a full-year resident? All right. So he is going to be a part-year resident, right? So the reason why, so the Minnesota residency test, right? So physically present in Minnesota for 183 days, which he definitely meets, right? 151 plus 9 plus 122, he meets the physical residence. The next one is you must rent, own, occupy, or maintain an abode for some period of time, which he definitely did, right? He did it for this first period, the second period, and this third period. So he will be a resident for those periods of time. He will not be a resident of Minnesota for a period of time when he did not rent, own, occupy, or maintain an abode. So this little California trip right here, this period of time, he was a non-resident for that period of time because he did not maintain his Minnesota abode. So that makes him a part-year resident for the year. Yes, Soren.
During that time period, he's still part here because he left.
It's because he didn't maintain an abode in Minnesota when he wasn't physically here. Yes. Yes. Yeah. So the test is really, it's terrible, right? So the first part is, were you physically present, right, for more than 183 days? And if you are, then that's a yes, and you set it aside. That's not part of the calculations anymore. Now to determine what period of time you were a resident, we only look at when did you maintain a Minnesota abode or rent, own, occupy, maintain. So, and it's only for those periods of time, completely independent of where you physically were, that you would be a Minnesota resident, right? So here, this first one, he rented an apartment. So he's a Minnesota resident for that period because he rented an apartment. In California, his lease was done, right? He wasn't paying for a place to stay in Minnesota anymore. He wasn't occupying any place. He wasn't maintaining any place. So that is a non-residency period because he was not maintaining an abode. Yes.
That means that even if he fits the other criteria for a full year. So that needs to be.
To be a full year Minnesota resident, he has to be physically present here for at least 183 days, and then he's got to rent, own, occupy, maintain for the entire year. So yes. to be a full year resident. Yes. Yes. Yes.
If someone was staying with friends,
Yes.
doesn't it mean like occupying the space?
Yes. Right. Because they're here, right? They're occupying an abode. So this is where that idea of an abode comes in, right? So what about like a hotel room, right? Hotel rooms don't generally have like cooking facilities. They do have bathing, but they don't have cooking facilities, right? So that probably doesn't qualify. What about like an extended long stay hotel, like has its own mini kitchen? Probably that would qualify then, right? But it's definitely possible. This is where like the dorm question comes in. I think like a sorority house as well, right? If you think about it, you're renting a room. You don't really have your own cooking facilities, probably not maybe on your bathing facilities. So I think it's probably similar to a dorm, basically. So it's very possible to be physically present for the entire year and be a non-resident because you never met that abode criteria, or to be physically present the whole time and only part year because of the abode, or physically present half of the year and be a full year resident because you had an abode the entire time, even though you weren't here, right? And I swear I've never really gotten into the history of this, but that this was created for snowbirds because they're like, oh my God, it's winter, we're gonna fly away. And Minnesota's like, yeah, if you keep your house, even if you're here or gone for a whole bunch of time, you still gotta pay tax. So that's, I think, where this shenanigan came from. All right, any more questions on that? I know this is like one of the really complicated parts of Minnesota taxes is understanding what the residency requirements are and getting it right. So it is well worth it to spend whatever time we need to make sure you guys have it.
Table, is there like any software that helps you make this work?
So that's what we're putting in place. So right now there is no software that does it. Right now there is a PDF. But the software improvement that we're doing in the tools, basically it copies your days over from the Am I a non-resident alien? So it automatically knows when you're outside of the US. And then you put in your days and like what state you were. And then if it's a state where we care about something like were you living in an abode, we ask the questions for that. Yeah. But if it's like North Carolina where it's just the days, then we're just like, count up the math. Okay, you go off to North Carolina part year or non-resident, you go off to North Carolina full year resident. So, but we have a little more testing to do. So, all right. What about online? Miss Kathy?
Maria, could you explain one more time for Maryland, the option 3 that we're using?
The option 3 on Maryland. Yes, I would be delighted to do that. Okay, let me go find it again. All right. Maryland.
Is it that you have to be here more than 183 days, but you have to have at least one day in each of 6 months?
Yes, so you have to be physically present for greater than or equal to 183 days.
Okay.
And you must have you must have maintained a place of abode, lived somewhere for at least 1 day and 7 calendar months. So more than 6 months.
Oh, okay. More 1 day and 7 calendar months. Okay.
Yes. So because technically, if you pick the right months, you could be under 183 days and be here or be at more than 183 days, but be less than, not more than 6 months.
Okay.
If you pick
I
like,
wonder why
there's
they
like a,
didn't just say at least 7 calendar months instead of more
I
than
got it.
6.
Yeah. I don't know, right? This is what we should torture people like Samuel with, right? So like, if you're going to be a lawyer, right, you should figure out how to write this in a more easily understandable and applicable method or verbiage.
Okay, thank you.
Of course. Anybody else? So yeah, so when we were going through this, we were like looking at, okay, is it possible to have like a 6-month period where it's more than 183 days, but less than 7 calendar months? And there are, because there are a few times where you have some like back-to-back 31-day months. So if you pick it the right time and you don't ever hit February, you can definitely do that.
Oh my-
So, all right, super fun. Okay, let's go try to find, here we go. This is where we were. Okay. All right, so if we were going to fix Sunil's return, we're going to take a break here in just a minute. So what we'd have to do, we'd have to update his W-2 to say he was out in California instead of Minnesota for the state. Then we'd have to follow the special circumstances guides to say, okay, you know, is he a part year resident, full year resident? Now we know he's a part year. We could do the California guide to prepare his California return as well. So again, the guides, scroll down. This is where all of the state guides live. These ones are not updated, the state ones yet, but other than Minnesota, I don't expect any significant changes. It's all that stupid cosmetic 2022, 2023 junk that I have to get to update. All right. And with that, I think we are definitely due for a break. It is just after 7 o'clock. So why don't we take about 5 minutes and let's come back 7:08. All right. I am going to sort of begin with a grain of salt. But thank you for that, for the source. Okay. Where were we? We got through this. We would change the guide. We would do that. All right. Back at 7 o'clock. All right. The best for last, once again. All right, Minnesota property tax refund. Oh boy. Okay, so no other former topic generates as much discussion in our tax clinics as this one does. The vast majority of our clients will not get this refund. I would say that around 25% of them, something like that, will be eligible for it. But of those that are eligible, less than 50% will actually qualify. So we're talking 10 to 12% of the people we see can actually get this refund. But probably 90% of them get a certificate of rent paid. And there are very big numbers at the bottom, and they look at it and they say, ooh, is this how much of a refund I can get? And so they come in with lots of questions about it. So it is our job to break their hearts as gently as possibly. Okay, so remember, the first thing to know about the property tax refund is that only a part year or a full year resident would be eligible for the property tax. So somebody that is a non-resident is not going to be eligible. Even if they were in an abode, if they weren't here for that 183 days, they're going to be a non-resident and they're not going to get a property tax refund. So that is very common that we'll get a bunch of people. This is their first year. They came here in the fall. They want to get their property tax refund. We'll say, nope, you weren't here long enough. They'll say, well, but how about in, you know, I've been here 183 days by now. Does that work? Nope, it's got to be 183 days in the calendar year. You were only here for 120 or whatever number it is. All right. The next requirement is that you cannot be a dependent. And this is the IRS definition of a qualifying child or a qualifying relative. It doesn't matter if you are claimed as a dependent. If you meet this test, you are considered a dependent. And it basically looks at the support that you have been provided. So if someone else provides more than half of your own support, you're considered a dependent and you're not going to be eligible for the property tax refund. This gets, 70% of the undergrad students that we see, right? Because the vast majority of them are not working jobs that will pay for over half of their own expenses. All right. You must live in a unit that is an abode. It must have been subject to property taxes. There are a lot of co-op housing units out there. If they are organized as a nonprofit, they can get a property tax exemption. And that means that they don't have to pay property taxes. So that means that you can't get a refund. If you don't pay them to start with, you can't get a refund on them. The only good news is it doesn't matter what your filing status is, unlike some of the credits on the federal return where you can't get them if you're married filing separately. This one doesn't matter about that. It all matters about what your living situation is. If you are a homeowner, you must have a social security number. I think that's only valid for 1 more year, and then now ITINs can do it too. I'm not sure about that, so I will have to confirm it. All right. If more than one adult lives in a rental unit, the rent is going to be split equally on a CRP form. So if 2 individuals are married, they each get their own CRP form. All right. So if you are married, the first question you should ask is, are you, not that we really want to know all their personal stuff, right? But are you married to the person that you're living with for property tax purposes, right? If you are, then you're going to file a joint return together for the property tax only. That will be on paper most likely. If they're not married with whoever they're living with, then each person will file a separate M1 PR form. If your income is less than the rent paid, the Minnesota Department of Revenue is going to be very curious. How in the world can you pay your rent when you have less income than what you're reporting? Student loans are a fantastic way to cover that gap, right? And a lot of people use those, and that's a very valid answer. If the answer is my family supports you, then we need to go back to, well, let's look at that dependency question. Are you really a dependent, or are you getting more than half of your own supports? All right, this is what the form looks like. The big item for us here. So most of the stuff copies all over without any real work that we have to do. The one place that we have to do it is this additional non-taxable income. So the idea behind the property tax refund, right, is that Minnesota wants to help the people that are the most vulnerable and needy and in need of assistance. And so when they look at that, they look at your taxable income, but they also look at any other types of support you might receive that are maybe not taxable. They add those all up. So they can say, all right, you know, Maria, yes, your income was $10,000, but you have a great treaty, right? Because you're from South Korea. And so that $40,000 fellowship that you got, that's all tax-free. That's not nearly the same thing as Zihao, who only has $15,000. So it looks like he's doing better, but he doesn't have any fellowships. So he is actually much worse off. He is the one that really needs that help, not me. Not really in life, but hypothetically, of course. So when you look at the property tax refund, you have to add back in a bunch of non-taxable income. And our students tend to have a lot of it. It includes things like any income that comes from outside of their home country, or outside of the US, right? Foreign earned income. So all of that income that we said didn't exist, right? Outside the US, we have to add it back in now. Government income outside, organization income outside. If there's income exempted by a tax treaty, we have to add that back in. We have to add back in all non-taxable scholarships, fellowships, grants, including those from foreign sources, including tuition waivers and fee waivers, right? So those add up very quickly to very large amounts of money. All right. There are some things that it does not include. There's a big, huge list. These are not common for our students. This is not something that we typically ever really see. What we generally see are additions. The one thing that we could add though in here, gifts and inheritances, right? If your family gives you money, that doesn't count. It may count towards the dependency, but you don't have to count it as income for the property tax refund. All right, second part of the form, second page of the form. There we go. Couple of other things. So the Minnesota property tax refund is not officially due until August 15th. They have 1 year after the due date to claim it, so they can still file it late, even if they are a little bit late. We generally have them go ahead and file right away because you can e-file it. So file it with your federal and your state at the same time, get it all done. They don't send the money out though until that August 15th timeframe. So direct deposit is super important for this, right? Because a lot of the students move over the summer. So a check that gets mailed hopefully will find its way, but a bank account doesn't move. You make a mistake, you can tell them about it and fix it. You've got about 3.5 years after the original date. You can, if you change it in the better way, you can get more of a refund. So it's all good. All right. So when we get into preparing these returns for our students or helping them do that, right? We need to go through, I would say, kind of a rigorous process with them. The first process is evaluating, are they really a dependent or not? And then the second process is, what additional non-taxable income do they have to add back in? So we have a refund worksheet. This one is not going to be automated this year. We've got no magic on this one. But basically what they need to go through is they need to go through an exercise to say, okay, what are all my expenses? And then what is all of my income? All right. And when we look at our expenses, we can look at tuition and fees, right? That comes from our one-stop account. That's pretty easy to get. Our rent comes from the CRP. That's pretty easy to get, right? Food, a full meal plan here at the U of M is like $2,500 a semester. All right. So that's like $5,000 a year. Possible to get away with a little bit less, right? But not going to be easy to be like half of that. There's got to be some money for like clothing and other miscellaneous items, shampoo, toothpaste. There's got to be maybe at least a little bit of fun in there every once in a while, right? So $3,000 to $6,000 easy, right? Which means we're talking $42,000 to go to school here if they've got non-resident tuition. So it's very expensive. And so to make up over half of that, right? So we're saying a job has to earn $21,000 probably or more. And there are definitely people that earn that, right? If you have the right degree program and you have an internship, or even if you have maybe not quite a perfect degree program, but you got like a 5-month internship, all of those things make it very possible to do. But we need to put that together. So we have these worksheets at all of the clinics. We have them online in the tools. We say, if you're ever helping somebody with one of these returns, have they filled it out? Go through this. The other part of it is that the Minnesota Department of Revenue does audit this quite a bit. So we want to put them in a good place. Having this all written down before they send everything in, if they do get a letter, makes it really easy to come back and say, hey, this is how I got the information. You can send that in to help document why you're entitled to it. Our good friend Samuel from the LITC, he talked about how they help with federal tax controversies, but they don't do states unless there is a federal controversy that kind of like underlies it. Property tax is state only. So there is no help for that one. There is help, but it's generally not free. And there's nothing fun about it. So do the expenses. It's going to be a big number. You have earnings, right? You have W-2, you have 1042Ss, you have scholarships, 1042Ss, the one-stop, right? Then the rest, loans, family, right? Where else does it come from? So get that first, because most people, you'll get that far and you won't have to go any further on the whole form. But if they make it through, then we need to look at all of that non-taxable income that they have. Treaty exempt income, scholarships, tuition waivers, fee waivers, bank interest, right? Non-resident aliens don't have to pay tax on that. So that means they get to pay it on their schedule. NEC income, if they came through on crypto, right? Well, we wouldn't help with any of that part of it. But if there were stock transactions, let's say a meme stock, then we could talk about it with them and we would have to add that in here as well. And so what we'll often see there is a PhD student. They don't have to pay their tuition, right? Their tuition's not very much. They get a fellowship. They have to pay their rent, all of those kinds of things. They usually qualify, right? They're not a dependent. They've got more than half of their own income. But when you add up all of those tuition waivers and fee waivers, they are so big that the amount of their property tax refund is very small, if not zero. So we do that, but it's worth doing it. So this is more kind of, yes, have the copy of the one-stop. So that's really important, right? We need their one-stop account to try to add up numbers. We include this, we tell them to bring it. If they're a student or if they're a teacher or researcher, they won't be students. They won't have a one-stop. They'll just have their pay statements, but otherwise they really need that. All right. So let's talk about a couple of examples. So these are sort of modified versions of our friends. We remember our dear friend Nick. He's from South Korea. So he came here in August of 2021. He went home over the summer. He lived off campus for the fall of 2023. That was not updated. Worked on campus for the first time this year. All right, so he lived in the dorms and then he moved to an off-campus apartment in 2023. What do we think his residency status is? If you think, I'm going to see everybody's stuff. If you think he's a non-resident, please raise your hand. If you think he's a part-year resident, please raise your hand. If you think he's a full-year resident, please raise your hand. All right, so I'm going to review. So he was here in the spring. He lived in the dorms. He went home over the summer to South Korea. He came back in the fall and lived in an apartment. Yeah, he's going to be a part-year resident. All right, so he was physically present for more than 183 days. And so now that we know that, we set that aside and we say, did he rent, own, occupy, or maintain an abode? All right, his dorm room, not an abode. His home over the summer in South Korea, he did not maintain any sort of Minnesota abode during that time period. But he came back and he rented an apartment. So that would be an abode. So he rented an abode from 8/15, let's say, through 12/31. So he is going to be a part-year resident because he was a resident of Minnesota for that period of time. All right. Kathy, you've got your hand raised. Is that just still left over or is that a question? Okay. All right. Any questions on Nick's residency status? Is that making sense to people? Somewhat, sort of following the really weird logic? All right. So what do we think about Nick? Is he going to be a dependent or not? If you think that he is going to be a dependent, raise your hand. If you think that he is not going to be a dependent for property tax purposes, raise your hand. Right? Does he provide more than half of his own support? Yeah, if he does not provide half of his support, raise your hand. I see some hands moving, but nobody wants to commit. All right, so what did I say was my round number for like a year of expenses at the U of M? Right? It was like $42,000. Yes, Stephanie, you're right. So he is, bless his heart, nowhere near $21,000 of income, right? He has got less than $10,000 of income, right? So he is paid for about a quarter of his expenses. The rest must be coming from somewhere. So we would have a talk with him about it. But most likely, since he went home over the summer, we're going to say probably his family is doing it, right? So, and then let's talk about non-taxable income. Does he have any treaty exempt income that we need to add back in? Raise your hand. Treaty exempt income? Nick. Yes, that's right, he does, right? He's got his 1042S for wages of 2,000. He's got treaty exempt income. Does he have any scholarships? Yeah. I'm sorry, say again? Well, it says scholarships here, right? Which is like list of the items is really what it was intended to be. The reminder for me to ask about it. So we don't have any information about that. Maybe he does, right? Maybe he's got a good deal. Maybe he doesn't. We don't really know. Likewise, we don't know about tuition and fee waivers, right? We'd have to see his one-stop statement to look at that stuff. Or he'd have to look at it ideally first and then show us whatever he did for his math. Same thing for interest and dividends. He doesn't say anything there, so probably he doesn't have anything like that, but those would be all of the questions we would want to ask him. All right, let's do it again for Lisa, right? So she came here on August 8th, 2021. She's been here the whole time. She lived off campus all year. She paid $7,200 in rent. She worked on campus. She got a W-2 for $8,400 and 1042S for $5,000. So what is her residency status going to be? Raise your hand if she thinks she's a non-resident. What about part-year resident? What about full-year resident? Yes, yes. Now I see hands. Thank you. That's exactly right. Yes. So she was physically present for more than 183 days, right? And she rented an apartment all year. So life is easy for her from that perspective, right? She's a full year resident. Okay. What about dependent? If you think she is going to be a dependent and not eligible, please raise your hand. Dependent and not eligible, raise your hand. Yes. That's right. Again, right? So she earned more money than Nick did, right? Almost, 50% more, but she's still not cracking that halfway mark. She's still got a long ways to go, right? Especially knowing, she had 36 for tuition and 7 for rent. So that's 43. So she's got some work to do. All right. For treaty exempt income, right? We know she's got $5,000 there. We don't know about any of the rest. We'd have to talk with her about each of those. All right. Let's talk about Sunil. All right. This is our modified Sunil, Sunil of the Grand Adventure. So he came to the US back in August of 2020, hasn't left, worked at the U of M here on campus, then went out to Cray in California, left on 5/31. We kind of talked about this, right? He got the Airbnb while he was out there. His apartment was done. He came back here, stayed with a friend for a week, then got his new apartment. So hopefully you guys remember, what is his residency status? Is he a non-resident? Part-year resident? Yes. Yep, that's right. He's a part-year resident, remember. So he is not a full-year resident because he was gone and his apartment lease ended. So if he had still maintained his apartment for that entire period, then he would have been a full-year resident. But because it ended, he no longer was paying any rent. His residency was done for that time period. However, he does not get any treaty exempt income, right? That's not the way the deal for the students from India work. Gets the standard deduction, but that is not treaty exempt income. Doesn't have any scholarship or tuition waivers or interest and dividends, nothing that he's talked about with us at least. So he's kind of starting from ground zero. All right. Okay, so let's talk about student one-stop account statement. So this is the Minnesota version. So other schools have their own version of it, but some of the basic stuff is the same. This is very important for the Minnesota property tax refund. It's also used when we're looking to see, is there a scholarship or fellowship that wasn't included on an income document? But generally for most other schools in most other states, it's not such a big deal to have their student account statement because usually everything is already on the income documents. It's really only for the Minnesota property tax refund that we really have to have that information to try to look at school expenses, scholarship payments, tuition waivers, payments that were made by the individual, all of that stuff. The other thing to know is that this needs to be for the full calendar year 2023. So there can be payments that show up for prior semesters. There can be payments that show up for later semesters, but we are calendar year basis. So January 1st through December 31st. And here is an example of what a actual one-stop account looks like. Obviously this one's gotten a little old, but it's still valid. So in the column called charge are all of the charges. So very cleverly named, right? It talks about all of these different fees. They're all a bit higher right now. Talks about tuition that's paid, student services fee, international student fees, all those kinds of stuff. There's also some fun that happened here back on January 24th. It looks like for whatever reason, they were originally charging him non-resident tuition, and then they took that off and they charged him graduate school transition or resident tuition for the grad school. So they obviously gave him some sort of a benefit right there, right? But we're going to just add all of those things up for tuition and fees. The next thing we're going to look at is payments. So like of these things, like which ones did he actually pay for? And we can figure that out because it says electronic payment, thank you, right? Those are all the ones that he actually made. All right, and sometimes it'll be like a loan or a flywire or something like that. It'll describe like what the payment is. There are also payments made by the university or by their department, right? These fee adjustments or tuition benefits or tuition waivers or health service credits, all of those things, those are all payments made by the university for him, right? Those are all tuition waivers and fee waivers or tuition benefits. So those are all things that have to get added back in as non-taxable income. He didn't have to pay it. He doesn't have to pay tax on it, but he sure as heck got the benefit of that. All right. So how are we going to know how much are things? We add them all up. So if this was Sunil's example, right? I made this one up here. So we add up how much was paid for by the school, how much was paid for by the client, how much were all of his tuition and fees. All right. We have a certificate of rent paid for Sunil for his first apartment that he lived in from January 1st through May 31st. Says he lived here by Lisa. And then he moved into his own apartment. Now he's living on his own, living the good life. All right. And we've already done our break, so we're not going to do it here. Okay. So let's put this into practice. We have about 30 minutes of time left tonight. Okay. So what I would like you all to work on is let's update Sunil's return for while he was out working for Cray in California. We're also going to do his Minnesota property tax refund and then submit those through Moodle. To be able to do this, you've got to do his original federal and state first, just so that you get that done because you're going to mess it up by making these changes. So make sure you do that one first. I would say if you get done early, you can work on things for next week, but probably that's not gonna, maybe it will happen. A couple of things on this. So we're gonna do Elena's federal and state returns in TaxSlayer. We're gonna do Sergio. You remember Sergio, we did him on paper. We're gonna do him again in TaxSlayer. And then you're gonna do one of my favorite scenarios. It's not quite ready in Moodle yet, so it'll take me just a few minutes to fix that and get it up there. But Gia is a very good preparation exercise for the tax clinics. So Gia is here at the University of Minnesota. She is studying psychology. She is a roommate of Lisa's, and she had a class with Sunil. And she talked to both of them while she was trying to do her own tax return. She comes to the clinic and he tells you that she is not sure that she did everything right. So you're going to review her return, and I will make sure that there is no surprise. She did make a mistake or two or more. So your job is to find her mistakes and prepare a correct return for her that does not have any of those mistakes. All right. And there will also be a where in the guide is quiz, which I will make up as soon as the rest of the state guides are updated. Okay. So that is the plan for the rest of tonight. For next week. Well, any questions before we go on? and then we'll talk about next week. Okay. So for next week, so it is our final training session next week. Yay, we made it through. It is a marathon. You are all like cordon bleu graduates. Okay, so we're gonna talk about NRVTAP leadership team opportunities. So every year we open the leadership team for new members. We recruit because our students, they graduate, darn them, they go away. So we find new folks to help us out. So we're gonna talk about the opportunities for this next year. We would love to have you join us. We're gonna talk about the clinic, kind of some more about the process, what to expect, kind of all those things. Then I'm going to talk about this whole Moodle final readiness check, right? So what are the goals? Why are we doing this? What do you need to do? When does it need to get done? Like, how well does it need to get done, right? I'm not expecting perfect, though some of you are given perfect results, and I would love to see it. And then we'll make sure that we have plenty of time for you to work on this on your training. But that means you got to get through all the assignments and get done and ready for it to go into the final readiness check. And then finally, we're going to celebrate, right? This has been a long journey. You guys have come a long way. You've learned a lot. We're going to hand out t-shirts to volunteers. We've got food from Raising Cane's. So everybody that's online, I hope you can come join us in person if you're here in the Twin Cities. If you want to at this point, you can do your own return. If you're not going to get a 1042S, right, you won't have that yet. But the software is live. I'll be happy to answer questions now or later as we go along throughout the season. But it's time to wrap it up and get ready for helping people. All right. One last, any questions?
Hey, Maria, I have a question.
Yes.
For the property tax refund, when you're calculating the income, the total income, do you also include that non-taxable income?
So for the Minnesota property tax refund, yes. So there's a line, this other non-taxable income, line number 5 on the property tax refund form.
Mm-hmm.
That's where that goes. Where is it? Right here, next to it, right here. So that additional non-taxable income, that's where it comes from.
Okay, if you are trying to find out whether the person is a dependent or not,
Oh,
so that
okay. Yeah.
Yeah, I was wondering whether you also include that non-taxable income in that income.
So yes, you would,
Okay.
right? And so generally that non-taxable income is not going to be considered a family source, right? So if they have treaty exempt wages, right, that's still their earnings, that's not family. If they have a scholarship or a fellowship, that's not coming from their family either. So those all go to their benefit in the dependent calculation.
Oh, okay. Thank you. Thank you so
Yeah.
much.
Of course. Any other questions?
I also had a question.
Yeah, Tessa.
For Sue Neal, when we change into California, is there like an address and like will we need to change like the EIN or the address to show California?
No, you don't actually have to do that.
Okay.
So, yeah, a lot of like the bigger companies that have lots of like different locations across the United States, they'll do all their payroll out of one location. So the address on the W-2 for the company may have nothing to do with like where the person actually worked.
Okay. So do you just change the state information?
Yeah, just change the state, change it to California.
Okay. Sounds good.
All right. Let me know if that doesn't work. All right. Anything else? Okay. All right. I'm going to stop.